Hi guys, it's your guy here, the unknown. Okay, and today I want us to look at something very important. We are not trying to guess directions. Okay, we are not trying to guess direction. We don't come to the screen and try to guess direction. That is not trading, that is gambling. Okay, and another thing, trading is not a get rich quick thing. You have to grow your way up. Okay, because even if you say maybe I'll have more risk to make more profits, you can't buy experience. Okay, the most important part is gaining experience, and growing your way through experience will help in the long run, because you can't cheat experience. That's one thing that is impossible to cheat. Okay, you can cheat all other things but not experience. So first thing, we are not here to guess directions. Okay, so in order to avoid trying to guess directions, we have a setup. Okay, and I know here it's number 2, but I'm just gonna explain something that I've already explained. Okay, for those who haven't watched it first, because I want us to be on the same page actually. Okay, so as I always say, you must have an A+ setup. Okay, an A+ setup is a setup that you understand, a setup that has been working for you, a setup that you know in and out. Whenever it presents, you can point and say, this is my setup. Okay, something you must know, you must understand it more than you understand your mobile device. Okay, and this will help you like stay away from learning multiple things. Okay, because one thing I've realized is that most people are not bad traders, and their setups are not bad, or their systems are not bad. However, they do spend much time searching for a holy grail or a better setup, and there is no holy grail. Okay, every setup has a drawdown. In other words, what I mean is every setup has a loss. Okay, even the best traders do experience losses. Okay, and one of my favorite trader is George Soros. Okay, and he has lost like $2 billion in a single day. He has lost $1 billion in a single day. So that tells you that even the best in the world actually experience losses. And if you don't know him, you can just go and do a deep research about George Soros. Okay, he's one of the best. He has been blamed by politicians for taking the currency down and all sort of things. That tells you how good he is. Okay, so you must have an A+ setup. An A+ setup doesn't mean it will have a high win rate. Okay, as long as you understand it. We have traders that have 30% win rates, like Peter Brandt. However, he's still one of the most profitable, and this only tells you one thing. It tells you that you don't have to have a high win rate to be profitable. No, you just have to cut your losses quick and let your wins run. And that's one thing George Soros says over and over again. Okay, cut your losses. It's not wrong to be wrong. When you are wrong, cut your losses. The most important thing is to know when you are wrong. So every time you put your stop losses, as I explained here, you must make sure you are putting them at a point where you know that, okay, if they are hit, then you were wrong. There is no need to revenge. Okay, there is no need for a re-entry. Okay, however, I will come to this. So always have an A+ setup. Make sure it's something you understand. It doesn't have to win always, but as long as it is something you understand and it works. Okay, with a win rate of only 50%, you can be highly profitable. Okay, it's just unfortunate that most people don't realize the potential of their setup, or they don't realize how good their setups are. Why? Because they experience maybe 4 consecutive losses and they think now the system it's bad. No, it's not bad. Every system goes through losses. Okay, and there is a random distribution between wins and loss. We say this every day. So what it means is you don't know which trade is going to be a loss and which one is going to be a win. Okay, hence we speak about win rates. With a win rate of 30, you know you're going to lose 70 trades and win 30. Okay, so you don't know which ones are going to be part of the 70 and which ones are going to be part of the 30. Hence, we don't over leverage and we don't risk more than we can accept or more than we can take. Okay, so I'm not going to go into this because I have already gone through this in most of my videos, and it will be injustice to the people who have already watched my previous videos because they already know this. However, I keep repeating this just to make sure that we are still on the same page. Okay, now here's our process. As I said in the opening, we are not trying to guess directions. Okay, we are not trying to guess directions. Once you start guessing directions, you are gambling. Don't come to the screen without an expectation. Okay, yes, things will change when you're on the screen based on the behavior. Hence, we have a signal day. Okay, I will go through this on the charts in a minute. Okay, we have a signal day. This helps us form our directional bias. Once we have a setup, it clears the guessing part. Now when we come to our screen, we know what to expect. Okay, we know what we are expecting. Therefore, the only thing that will be left is to see the setup. So don't come to the screen and try to guess. That's where things go wrong. Okay, once you have a signal day, then the guessing part has been eliminated. Okay, it has been filtered out. Now things are more easier. So once you get a signal day, if it's confirmed, it's fine. If it's not confirmed or on the pair you are looking at, there is no signal day, then just let it pause. Okay, maybe you'll find something in tomorrow or day after tomorrow on in 3 days. Okay, hence it's important not to stick onto one pair. I hear people saying trade one pair. No, don't stick on one pair. Okay, this have a setup that works on every pair. Okay, so the second thing is to come and look for a setup. If a setup is there, then you tick. Okay, then you tick. If a setup is not there, you wait. If it is not presented, maybe during the Asia, if you are trading the Asian session, and yes, you had a signal, however, you don't have a setup, fine. Just wait. Okay, you can go through other currencies, but for that one, just wait. Okay, maybe the setup will be presented, or maybe not. If it's not, fine, you did nothing, you preserved your capital, because the first thing is to preserve your capital. That's the most important thing. That's the most important thing. Like Paul Tudor Jones will teach you about things. He keeps repeating this. The most important thing is to protect your capital. Protect your capital. Okay, and Peter Tudor Jones again, he said that only risk, that means only open a position, only risk when you see something. So in other words, if you have a signal there, you tick. You have a setup, you tick. So what you will be waiting for after a setup has been presented is a pattern. Once a pattern is presented, you're gonna be waiting for a break in structure or a break of structure. Okay, based on the setup. Okay, and once the pattern is confirmed, then you wait for a break of structure or break in structure. Once the break of structure or break in structure is presented, for me personally, I will then wait for a retest. Okay, a retest. Okay, once a retest is confirmed, I will wait for an engulf. Once an engulf is given, I will tick, and that's when I will open my entry. Remember, Paul Tudor Jones said, only risk when you see something. Okay, only risk when you see something. This will help you. Why? Because you have an A+ setup. Okay, and you have a checklist. As this checklist gets confirmed, you can open a bigger size. Why? Because you know you're not gonna be trading every day, and one thing you know is, okay, you're gonna have stop losses. Okay, you're not gonna risk much, but you're gonna have a higher risk reward, say maybe 1:5 if you're a short-term guy. If you're a long-term guy, you can go from 1:10. Okay, the most important thing from now is let your wins run. Okay, let your wins run, because one thing that is guaranteed, if it goes against you, it's gonna close this one. And if, for instance, you have a risk reward of 1:5, sorry for dwelling on this, it's a common mistake that I see every time. Okay, if you have a risk reward of 1:5 or 1:10, and when you come to your screen, because usually what I do is I open a position, okay, and wait for it to confirm for more entries. or say for instance, for a place where it will give me an opportunity to size in, okay, to add more size, okay, depending on my account size. Okay, once that has been given, what I want to do most of the time is I want to close the charts for 1 hour, and then I come back after an hour to see what has happened. Why? Because you are human, you have emotions, I'm human, I have emotions, and sometimes when it's in profit, it's more easier to close small profits. Okay, so I want to come and see what it has done, and if it has gone in my direction and pulled back along the way, however it's still in profit, I can just trail my stops. Okay, that is to book profits, trail my stops, and then after trailing my stops, I can close the charts and continue with what I'm doing, or even I can go out. I don't mind, because I've already protected the small profits that I've made, and now I'm waiting for it to hit my take profit. If it comes back and closes me, fine, I am risking nothing. Okay, and I have small profits locked. Okay, so that's what I do most of the time. So just a recap, don't come to the markets trying to guess the directions. Okay, have a signal day set up, have a checklist actually. Okay, you might not follow the ones that I follow, it's fine, have your own. However, the most important thing is to have an A+ setup and take that setup every day as an algorithm. And if there is nothing on the day, fine, skip it and continue with your business. We're gonna go through the charts. I'll show you some of the things that have happened today and yesterday. Okay, so I just wanted you to understand this, and if you are new, you can hit the subscription button and comment, because my objective is to make sure that everyone becomes consistent. That's the most important thing. Hence I'm saying have an A+ setup and stop searching for multiple setups. Okay, different people have different setups. George Soros have a different setup as compared to Paul Tudor Jones, and Paul Tudor Jones have a different setup as compared to Peter Branded. Peter Branded has a different setup as compared to other traders. Okay, like Billy has a different setup as compared to Bella. Okay, Bella is one of the good traders that you can benefit a lot from. Okay, it's actually called Mike Bellafor or Mike Bellafury. It's all about how you pronounce it. He's one of the best you can learn from, and he has 2 books. One book is One Good Trade, and the other one is the playbook, where he teaches you how to have your own playbook. Okay, create your own playbook made of setups that you understand. Okay, because sometimes you might find it hard to follow everything I understand. You are not me, you are you. Okay, you understand concepts in a different way, and when you go to the charts, that's when you will learn something different. Okay, so without any further ado, let's jump into the charts. But before we do that, you know our process. The most important thing before opening the charts is what is coming to your calendar for the day. As you can see, yesterday we haven't had much moves this week, and today is Tuesday, we are going to Wednesday. And the reason we didn't have much moves on Monday is because there were multiple bank holidays. Okay, there were multiple bank holidays yesterday. As you can see, US, Canada, and Japan, there were multiple holidays, hence there were less volatility. Okay, and coming to today, there was no news, still we didn't have much volatility, and I can say the reason is that tomorrow we have FOMIC. Okay, so kindly be careful tomorrow. We might not have much volatility during the day, because later in the evening we have a FOMIC meeting, which is highly important, and it's highly volatile. So usually most of the time I don't like trading FOMICs. Okay, but if you understand the setups and everything, you can get good opportunities. If you don't get good opportunities, you will get good opportunities the following day. Say for instance, if FOMIC like is favoring the dollar, and the dollar starts going up and up and up, the following day or the following morning around the Asian session, you'll find that most of the time the move is still under the influence of the catalyst, which was the FOMC meeting. So if FOMC meeting took the dollar up, then even during the Asian session you might find that the following day it's still going up because it's still under the influence of the FOMC meeting. So yes, we have a couple of news, but just expect this. You might not see a lot of volatility during the day, or else they might just jam you and pull you into one direction so that they can punish all of you during the FOMC meeting. Okay, remember, trading on a intraday or trading on a short, like we are short term traders, so most of our market is influenced by market movers, which is manipulation. Okay, so you must understand that part of manipulation will include like pulling you into one direction, maybe up, and then the FOMC meeting might just close all of you. Okay, because already remember, the market movers, they already know the results of the FOMC meeting. They know what they're gonna do tomorrow. Okay, the only thing left is for them to display the results in live time, but already everything has been prepared. Okay, and there is a saying that most of the orders are prepared 2 days before what we see on the charts happens. Okay, so basically I don't want to confuse you, don't go into that. I just wanted to say that. However, just know that they have already planned the news, and what we are waiting for is just something that they already know what they're gonna do. Okay, or something that's already have been done. It's just that the movements will take place tomorrow during the event, during the time when the events will be released. So don't try to actually chase things or whatsoever. If you are in profit, make sure you lock your profits before the FOMC meeting, and you can just leave a small trailer in case it goes in your direction. But what I know is they're gonna try to be violent, hit people up and down during the FOMC meeting before going in the right direction. So we might not get too much volatility. Okay, so let's just jump into the charts and look at something. Okay, sorry for dwelling on that for a long time, but yeah, just expect less volatility during the day tomorrow, but anything can happen. These are the markets. Okay, so anyway, anyhow, if we look at USD JPY, for me, I didn't like this because, okay, as you can see, we are still inside. Let me just do this. This thing is trading inside a box. Okay, it's just inside a box. Let's see, it's inside a box that was made last week Tuesday. Okay, because you know that the yen was too violent last week Tuesday, and yeah, let me talk less and show you the actions. So we are still inside the box, and I saw this as just consolidation. However, yesterday it gave a first trade day, and today it went up. But this happens usually when they are in a consolidation, where we see them giving a first green day, a first red day, and then the following day they give a green day, the following day they give a red day, the following day they give a green day. So this to me is consolidation, and usually I don't want to do anything up until this one breaks out of the consolidation. So one thing I will do is I will note my consolidation. Okay, my consolidations, and roughly this is my consolidation, and I want it to get out of here because this is not what we trade. We trade a market that is trending. Okay, and we know that most of the time it's gonna be in a range. So this is one reason you don't try to overtrade. Okay, so for this one today, I didn't expect anything, even though it gave a first actually it's a first red day, hence I wrote day one here, but I didn't give it much attention because I know that it's in a trading range. I want them to break out, and that's when I can see what happens and all sort of stuff. But for those who trade like support and resistance, I believe this gave you an opportunity. And one reason they do give this once in a while is because they want those who trade support and resistance to win sometimes and lose most of the time. Remember, they don't care about blowing your account in a single day. They know that, okay, you will eventually blow your account if you believe in the support and resistance and all sort of stuff. But I'm not saying they're bad. If they're working for you, then good. Okay, I'm not here to disregard what other people are doing or using. Okay, so this is Great Britain, Australian dollar. I actually took this today, but it didn't go much. And let me tell you or show you why I took this one. I did explain this last week, and I did take it last week and it closed me. I took it today, however I had to take small profits early and close early. Okay, sorry. And the reason I took it today was for me this is the box. For me this is a box where it is trapping volume. Okay, and yesterday they broke there was a break in structure. Okay, I'll show you everything. Okay, this is what we have. Okay, fine. Yesterday we had a break of structure. As you can see, everybody going up here is trapped. Okay, however, anything can still happen, just know that. But yesterday we had a break of structure, which I was waiting for. Last week I showed you where I took it and where it closed me, and I gave you all the reasons in my previous video. So if you look at everything I do and say, it's almost one and the same thing every day. Okay, so yesterday it gave a first red day. Okay, it gave a first red day. Okay, and then I expected it to come down out of this box maybe today. And when I came today during the US session, I waited for it. It gave a first red day. And one thing I want to do always, I want to see the behavior, and by the behavior I mean the pattern, as we the not the pattern but the setup, because we need a signal day. This was my signal day, even though it's consolidating, but this was my signal day. Okay, and remember, it has already broken structure last week. Let me show you. Let's go to a 1 hour time frame. This thing has already broken structure last week. Okay, so if you can see, this was a break of structure, and a break of structure simply shows that momentum towards the downside is now strong. So hence why I anticipated it to come out, because as you can see, it gave a first red day that closed outside of the box. So everybody going up is trapped. Okay, so this is why I anticipated it to go down today. However, you know that once we have a signal day, okay, we need a setup. And what is a setup? For a first red day, it's a pump. We need to see them going up again, pumping the market up. And as you can see, we usually look for 3 levels. Okay, so for me, when I came to the market during the US session, because I was observing this very carefully. Okay, I was observing this very carefully. This is what we had, as you can see. Okay, let me take that box down here, because it broke this box. So we had 1 2 3 25 pips. So 3 boxes of 25 pips. Okay, therefore this market has gone over 75 pips. Okay, it has gone over 75 pips, and it didn't complete it did complete the 4th one. However, that's where it failed. It started failing here. This is what I want to know every day. Okay, and for this one, it just pinned below here. So basically I can take 3 boxes from here which were completed. Okay, which the bodies did complete. So for me, there's gonna be a variation. Okay, so sometimes you just have to use your skill to understand these things. Okay, so this is why I'm told you that you can't replicate everything I'm doing, because there are certain things you will ask me, why didn't I take this box? But based on my understanding, I can take this box because here you see the bodies failed in this box, okay, and I need to be sure that it has risen roughly 25 pips. Okay, this is my pattern. Okay, so I had a signal day. Okay, then I took the signal day was there, and the following day I came, which was today. I have to see the setup. The setup for me is a market that rises at least 3 levels. It could be 350 boxes, which will mean it rose at least plus minus 150 pips, or it could be 3 boxes of 100, which will mean it rose plus minus 300 pips, or it could be 3 boxes of 25, which will mean they rose at least plus minus 75 pips. In this case, it's more than 75 pips. Let's take the last body to the last body. It's 98. As you can see, they completed 75 pips, which is 3 levels of 25, 25, 25. And let's look in terms of the sessions again for those who are using sessions. Okay, they did, the first session went up. Okay, the first session went up. The second session also went up. Where did it close? You can put your line here just to see if the second session did go up, but most of the time we will put our line here. Why do we put our line here? Because this is where the move went before the new session. This is the high. Okay, this is the low. Actually, this is the low, this is the high of this session, because now we are including gap times. Okay, so this is the high that this session went. Any trade that was executed during this session, yes, it went up to here and came and closed here. And when this session opened, if you check, it gave us a double top, as you can see. However, it gave us a stop hunt. In this case, it closed everybody from the previous 2 sessions. Okay, everybody who was in profit, who actually opened during any of these 2 sessions went to this high, and everybody who sold at the end of here before the US session, everybody who sold here was closed by this pin. Okay, that's what we want to see, which is part of the behavior. However, I waited. Okay, I waited because I know that usually the first hour will give us a high and a low of the session. Okay, so when we got a double top is a pattern. Where is our double top? This is our double top. This is the pattern. The behavior was right. In other words, we had a nice signal day, and then we had I want to use chart like this. We had a first red day. This is a signal day. What does this mean? This means on this day we are expecting a move down. Hence, most of the time you will find these arrows on my charts. I usually put these arrows to show what I'm expecting for the day. That means I am not taking a counter trend on the day. Okay, however, based on behavior, sometimes you'll find that, oh, they just break and keep going and keep going. That's when maybe you can decide to take a counter trend. But for me personally, because I know what I'm looking for on a daily basis, when I find this signal day, then I put my arrow here. This shows that, okay, fine, we are only looking for a sell on the day. However, we need a sell high. We can't sell low. What does that mean? That means that since you see the market has been going down, the lower it goes, you can't sell because now you are selling high. The only reason we need this kind of a pattern, this kind of a setup where it goes high on the day, which is part of the behavior, we need this so that we can get a position where we are able to sell high. Why? Because already we are expecting the markets to go down, the price to go down to at least the low of the previous day, or at least, in this case, it started by breaking the low. It's fine, but this is a fake breakout. We can't say this is a breakout. It's a fake breakout. So we have a low. So at least we are expecting prices to come to this low. However, we want them to get pumped. Why? Because we want to buy high. Okay, buy high, sell low. Business sense. Okay, business 101. Okay, so that is something you must bear in mind every day. Okay, you don't sell when the move is going down or when the move is already down. The same applies to if somebody wanted to buy today. You can't buy somewhere here. Why? Because the higher you go, they will be ready to jam. Okay, they will be ready to jam, or they might be ready to reverse. So if you are selling, you want to sell low, more especially in this low box. Okay, so the reason we know the box in which they failed, it's because we want to get a fill on the lower box. As you can see, I'm using a sweet spot indicator here which has boxes of 25. So if it fails in this upper box, if it failed up high here, we want to get a sell high, meaning we will expect to get a sell in the upper box. However, as you can see, it failed in the lower part of the box. Therefore, we are expecting to get an entry in this second box down here. Okay, that's where we get our M pattern. Okay, and now let's go to our lower time frame. The moment I get a pattern now, so now on our checklist we have the signal day confirmed, we have the setup confirmed. Now we have a pattern. Okay, we have a pattern, and now the pattern is confirmed. Why? Because we have a double top. Okay, and we have noticed the box where it is possibly failing. Now when we have a pattern, we need a neckline. Okay, we have a neckline. We want to see them breaking out of the pattern. So here we want to see them breaking out of the pattern. The moment you see them breaking up out of the pattern, what I usually do is I go to a smaller time frame now. Okay, people hate the 1 minute time frame. It's okay, but for me, the 1 minute time frame gives me an opportunity to have a high risk reward ratio. Already my risk reward is 1:5, but I can have a smaller risk if I am on a smaller time frame. Okay, so basically as I said, the moment they break the neckline, I told you this is now a break-in structure. They've broken out of this pattern. Okay, they've broken out of this pattern. However, when you come to a smaller time frame, this is what you will start seeing now. Okay, this is what you will start seeing. Okay, now what we see is we had something like a triple top on a smaller time frame. These are the things we want to see. Okay, and we have this big M on a bigger let's see, on a bigger, I want to show you something on which actually happened and was visible on a 5-minute time frame and a 15-minute time frame. So it's up to you. For me, I want to see them breaking out of this. Okay, that's when I come to a smaller time frame. Okay, when I come to this smaller time frame, what I want to see them breaking structure. So this is where they broke structure. Okay, they broke out of the neckline. As you see, they broke out of the neckline. Okay, they broke out of the neckline. However, they went in 3 pushes: 1 push, 2 push, 3 push. The third push failed and we saw an engulf. Okay, what did I say? What did we talk about? Let's go back to where we were. We said the first thing we want to see is actually what we say the first thing we want to see is actually a signal day. Okay, confirmed. Okay, the second thing we want to see the first thing we want to see is a signal day. This is a market that opened high and closed low. Okay, close low as a breakout day. So this is our signal day. It's a first red day. In my previous video, somebody said I'm making these things complicated because I mix words like first red day, first green day. Okay, and I didn't respond to that comment. However, I am going to respond now. Don't say I'm making things more complicated, okay? I don't want to sound rude and I don't want to be rude, okay? In the calmest way, I'm going to say, don't say I'm making things more complicated. Rather, try to figure out what is the word that I'm saying and why do I say it, okay? When somebody says something, don't say they're making things complicated. Because for those who have been following this channel, for those who already know what a first red day is, and for those who already know what a first green day is, this is part of the setup. This is part of the system, okay? We cannot mention anything without a signal day. What you are trying to tell me is now that, by me mentioning the signal day, I'm making things complicated. Then there is no system without the signal day. That's the first thing we look for. That's the first thing we look for, the signal day. And if you are telling me that, okay, I'm complicating things because I'm mentioning my signal days, then guys, there is no point in making the video. You are looking for easy things, but you must understand where everything is coming from. This is only fair for everyone. I can't just say it went up 1, 2, 3 without mentioning the signal day. Go back, watch other videos, try to understand what is the signal day, what is the first red day, what is the first green day. Many people on this channel already understand that, okay, and they're able to follow because we start from the signal day. All my videos, when I talk about something, I'll start from the signal day because that's where everything begins. So I didn't want to be rude on the comment section, and honestly, I didn't know what to say, okay, because that's part of the system, okay. You want to understand the system without understanding the foundation. Sorry, that's kind of impossible, okay. So we did mention, I'm not gonna make this video long. This is where I'm gonna end, okay, because one setup a day, it's fine, okay. So we had a signal day and then we had a setup. A setup is once we have a first red day, we need to see them setting up the right way. In other words, we need to see them taking the market up, pumping the market up, okay. That's what we need to see, okay. So now it has been pumped up. We can see our M, and they did break on a smaller time frame, and they moved. They went up again. So basically now I can tick. I had a signal day, I had a setup, I had a pattern, okay. On a smaller time frame, yes, I did have a break in structure and I did have an engulf, okay. So once all this have been met, it's my time to enter, provided it's the right time, okay. Sorry for what I've said regarding that comment. It's just that sometimes you don't know what to say, okay. So guys, we had this, and sorry I'm dwelling much on this because I want you to understand. Even if you decide to watch this, I want to be as slow as I can so that you understand, okay, because it doesn't make sense if I just say I entered here and this. No, it only makes sense if I show everything accordingly, okay. So this was an M, and then I told you the moment it breaks down, you can see even here they did break out, okay. Even if it's a pin, they did break out, okay, and they did retest, and they did give a pin and engulf. What we need is an engulf, and once you get an engulf, we put our stops above that engulf. So as you can see, even on a 5 minutes, this is the last fail I mentioned in my previous video that I want to see. And if you see, we were on the outside of the 20 moving average. This is a 20 moving average, by the way. For those who follow, they already know. So we were on the other side of this EMA, okay. And then the pattern, yes, it closed inside. However, the retest came, and as you can see, now we are on the inside of the EMA. This is where I took my my trade. I took it right here, okay. I took it right here, and this was I think it was roughly, was it a couple of minutes towards 9:30 US time and 3:30 South African time, okay. This is where I took my trade. This is where I took my trade immediately after this engulf. As you can see, it's just a few minutes towards the equity time, okay. And then yes, they did try to consolidate to come back, but they didn't come back to my stops. Okay, so in this case you can put your stops here, or you can put your stops here. It's not about the stops, it's about the quality of the trade. If we go to a 1 minute time frame, you will see that we had a very big engulf. You see, one push, two push, three pushes. We had three pushes, and I did write one and I did write two, and I did write three. And then after this engulf, that's where I entered, and I placed my stops just above here. I accounted for the 2 pip spreads that GA has. Okay, and as you see, I allowed it to go. Okay, and it did go roughly 40 pips, where it did go 40 pips because I took it roughly here. You see, it did go 40 pips. That's what it gave. And then it gave this pin and then engulf, and then it started consolidating. And the moment it started consolidating here, that's when I closed it, because I don't want them like as you can see, now they're giving a peak low. Okay, now this is like a peak low, and it's already late, so I don't expect them to go down much, because already by this time it's late, and now they're only consolidating. So I closed it around here with roughly 30 something pips. Okay, however, it didn't really go that much, because I at least, let me show you something. This is the body. I at least expected 3 expansions. However, it did give 2. Okay, this is the body. As you can see, it did give 2, and that's roughly where I closed it. But for me personally, I was expecting at least it will go 3, or at least it will go to the low of the day. However, it didn't, and it was fine for me. Okay, it was fine for me because I followed my process. And another one that I took was gold. Okay, let me show you. Wait. Okay, sorry for this. So basically, I also took gold. Okay, and I don't want this video becoming way too long, even though it's already long. Okay, so basically for gold, the reason I took it is, as you can see, Friday they gave a first green day. I'm sorry for those who say like I'm making this complicated, but rather try to understand why am I mentioning these words. Okay, because if they were not important, I wouldn't be mentioning it. Okay, so it gave a first green day. However, it opened with a gap, and yesterday honestly there were too many gaps, and I don't feel comfortable because I don't have a setup that takes gaps into consideration. So usually when I get big gaps like this, I just do nothing. Okay, I do nothing. Honestly, I just want to be honest. Okay, I do nothing. Why? Because I don't have a setup, and I don't understand gaps that much. Okay, I don't understand gaps that much. So if I see a gap, I just want to be out. But one thing for sure that I realized is this was first green day. And you all know that my favorite setup is day 2 continuation. However, in this case, honestly, I wasn't comfortable because you see this gap. They could have came and closed it. I didn't know what they were going to do. But today, I knew that, okay, today they gave yesterday they did give a day 2 continuation in their own style. And it closed roughly here. I want to show you. Okay, it closed here. So today I knew that, okay, today was a day 3. Okay, I'll show you the trade that I took. So what I did, actually I'll show you. Okay, I will show you. So today it was a day 3. Yes, it hit and closed here. Okay, however, for me this is not really convincing. Okay, today it wasn't really much convincing. Okay, so what I decided to do was, okay, fine, this breakout wasn't convincing. However, the setup was convincing. As you can see, we have a session that dumped, session 1, session 2 dumped, session 3 dumped. This is 1, 2, 3 in terms of sessions. We talked about this, okay? And another thing that I looked at is, okay, this move is failing up here, and I want to see them completing at least 3 boxes. It could be 3 boxes of 50, 3 boxes of 25, or at least 3 boxes of 100. Okay, so 25 box, 25 box, 25 box. They completed at least 75 big boxes. Okay, and basically they failed on the upper box. Let me show you. I want to know the box where they are failing. This is what I do every day. Okay, okay, they didn't fail with there, they failed actually in this box. Okay, so as you can see, the bodies I showed you in the previous example, the bodies failed in this box, so it's not convincing. I don't want to be confused. I want to make sure I'm not confused, all my criteria are met. Okay, and then when we came down, it started failing here. Okay, so this is what you have. Okay, you see where the pins are, you see where it's failing. Okay, and as you can see, it's actually failing at the high of Friday. Okay, this is where it's failing, at the high of Friday. So it did come back and it started failing. So for me, because it was day 3, one thing I was expecting, I was expecting a buy. Okay, a buy. Okay, and I usually put these errors here because why? If it breaks and keep sending people high and high and high, then I can see the behavior, why it's day 3. And if it's day 3 and it's sending people up and it's trapping people on the upside, towards the upside, sending people up, that's when everything will change for me. And because it's day 3, usually on day 3s we expect a day 3, okay, breakout, and then based on the behavior later we can expect a sell. But the first thing we are expecting, it's a buy based on the behavior. So yes, it did break, not convincing. They broke and immediately sent people down. Okay, so for me, I couldn't say I'm expecting a sell just because they broke here. No. Why? Because you know that there is less volume, less people are actually active during the Asian session. Meaning more people are going to be active during this session. So if they want to go down, most of the time they will break and try people maybe on the high of the previous day. Okay, try people high and send people high for the whole 3 sessions. That's when we know that, okay, they were able to gather enough orders so that they can actually go down. But in this case, they just touched up. Okay, send people from Asian session up, and then they collapse the market, and then they collapse it. So what I have is 3 levels of 25 collapse, and again I have 3 sessions where they were just taking people down. So one thing I can do is I can draw my line here at the end of the session, and at the end of the session I can draw my line here. So one thing, because this is the low of the session before the opening of this London session. So as you can see, I have a session that went down, I have a session that went down, and I have a session that went down. So we have 3 sessions. We had 3 levels. And if we calculate the pips, we have obviously more than 75. It didn't go to 150. Therefore, it's 3 levels of 25. Okay. So one thing I was expecting today, or when I took this trade, I told you, we're going to look for the pattern. Okay. As you can see, 1, 2, 3. This is a triple bottom. Okay, it's a triple bottom. As you can see, this is a triple bottom because this market was just too choppy. When you see all these big candles going nowhere, you must know that, okay, they are in the business of collecting orders, because now they are using very big. Look at when they were dumping small candles, even dumping itself, small candles. They only use big candles now when they are trapping and doing all sort of, I don't know, crazy things. Okay, when they're trying to get everybody trapped, that's when they start using big candles. And I'm going to show you something I've noticed, which is highly important. Okay, and I've been observing this behavior for quite a while now, and it always sticks. Okay, it always sticks. And if you start observing it, you will see that, yeah, this behavior is highly important. As you can see, now they are using very big candles. No news on the calendar, important thing. They are using very big candles going nowhere because these people are just chopping. You don't want to be in a market that is chopping. Okay, that's the first thing. Don't want to be in a market that is chopping. Okay, so now what we need is we need a pattern. Okay, on a bigger time frame we saw a triple bottom, but now when you look at it, it's 1, it went down, 2, it went down. You don't chase this candle, it's too big to be chased. Hence we said, if buying, buy low, if selling, sell low. Okay, doesn't make sense. You don't chase this candle. However, do notice that if we go to a 1 minute time frame, that's where all these things are gonna start clicking in. Okay, one thing you have, what do we need? We need a signal day. Yes, we had a signal day, which was yesterday, day 2 continuations. Okay, and we need a setup. Yes, based on the setup, we had a dump, which is a good setup that we are looking for. Okay, and now after setup, we need to see something like a pattern. Fine, let's go and search for the pattern. Okay, we need to see a pattern as they are trading. And if you look here, they gave us a nice W. However, it didn't make sense because of the size of the candles. Okay, when they use these big candles, you must start being curious, because they are using big candles going down and they are using big candles going up. And now one thing they are doing, they're just chipping the line. As you can see, they are chipping this line. Okay, they are not actually going anywhere. Okay, they're just chipping on the numbers. Okay, that's important. Now you see, and for me on this one, I waited for the equity opening time, and the equity opening time was somewhere around here. That's when they pumped the market up. And when they pumped the market up, what did they give? They gave us a break in structure. Okay, they gave a break in structure. Okay, they gave a break in structure. As you can see, this market was going down, and market structure, this is the high, this is the low. Okay, this is inside consolidation. When they break this low, this becomes the recent high. However, this is the high and this is the recent high when they break. So when this becomes the low, this becomes the high. So you can see that they did break structure. Okay, they did break structure. Okay, which is what we are looking for. You could even use this point. It's all up to you. Okay, you can even use this point. Where is it? Sorry, you can even use this point. It's up to you. Market structure. Once you understand market structure, you will know these things. Okay, and then they broke structure. This is the first thing I want to see. Mind you, the market is too choppy. Okay, it's too choppy for you to enter. Therefore, you must see a break in structure. We don't want to get into something that's chopping. I prefer being out. And look at this. This is what actually attracts my attention every time it happens. We have a low. This is the low of the day. Okay, and then they come down to the low. However, they scare everybody out. They don't close. Okay, we don't want to be guessing direction, but now there's something happening here. This shows that, okay, there are people going down, people whose orders got fulfilled down here below this one are now trapped and they are not releasing them. So this shows you that, okay, now market makers are actually buying. Okay, they are buying, and we all know that they can't actually execute their whole orders all at once. Okay, hence the pattern. They can't execute their orders all at once. If you can see, we have a double top before the breakout structure. This is a pattern. The break structure, we have a double. Now we need to see them coming back inside a retest. Okay, and one thing we also have is now we have this major resistance. Okay, we have a major resistance which they can possibly come and trade into. Okay, the reason we have this major resistance is because now it shows us that they are trapping, and most of the time once they come close to a level and they don't break it, observe your charts, go to your charts and study the charts. You'll see this every time. They are gonna do this the third time, and usually the third push is the one that they're gonna close. Oh, he's saying this because it happened here. Okay, if you think I'm saying this because it happened here, let's go back to Friday. Wait a minute. Sorry guys for making this video a little bit too long, but was it Friday? I don't think it's Friday. It's when was it? It was, yeah, it was somewhere here. Okay, it was somewhere here. Okay, let me show you here. Okay, it was, I think it was Wednesday. You see, they actually came here, they gave this other low, okay, which was the second one. And as you can see, right before they went up, they gave these lows. However, they closed these ones, but these two remained intact. Then they went 75 pips. Okay, 75 pips, enough for somebody to take profit. Actually, they went 89 pips, 90 pips before collapsing again. So most of the time, this behavior, you're gonna see it every now and then. Why? Because they trap traders, come back, trap them, then reverse. You're gonna see this every now and then. Okay, so this is an interesting behavior every time I see it. Okay, it actually paints a story for me. Okay, I'm sorry, this video is becoming too long. It wasn't supposed to happen like that. So basically, this is now painting a story for me. Look at this behavior. You're gonna see it every now and then. Now they came to the low, they came back, but they didn't close these guys. They don't want to release them. Why? Because they can't sell all their orders at once. The only time they will come back and close these guys over here is when most people got it right, and now the money down here is more than what they've grabbed. Say for instance, yes, their goal was to take it was to actually buy $2 billion. Okay, and now they see that, okay, they bought $2 billion or $2 million. However, here there's $5 million. That's the only time you will see this behavior repeating itself. Sorry guys, sorry. I just want you to understand this. Okay, this is when you will see that, okay, they have gathered. You see, they didn't start. Yeah, they gathered, they moved up. Okay, and that's the only time they will end up coming down to close everybody. Why? Because now the money that is down, or the stops that are down from people who are now buying, because there were just too many pins here, many people were buying. So if they come and close everybody, that means the orders are below were too much to ignore. Okay, so you will see this behavior every now and then. Okay, just want to show you the trades that I took. Okay, I took the first one where I took 30 something bips. Was it 32? I think it was 32 bips. Yes. And in other words, I'm showing you this because you must be able to point all the trades you have taken every day. If you take a trade and I come and ask you, what did you execute today, and you are unable to tell me, that shows that you are not ready, or else you are not putting in the work, or you are just taking some random things. I can show you all the trades I've taken last week, all the trades I've taken this week. That's why I'm still able to go back and show you what happened, because I know my criteria, and I know whenever something happened that I ended up taking. Okay, so basically, as you can see, they trapped everybody down is trapped. They come here, okay, they want to sell more, sending people down. Whenever you see this behavior where they keep sending people into one direction, they give a low, a major resistance, a candle that is a major resistance. This is the last candle going down before this one. We can't use this one, it's too big. Okay, so we're using this one. They come back to it. Okay, they go, they break structure, and they come. In other words, they close everybody here. If you entered here, then you entered before the break of structure. Okay, if your criteria says you wait for the break of structure, always wait for the break of structure. So as you can see, we got a break of structure, we got what we needed. They came coming down. Okay, it's like 1, 2, 3. Okay, they gave 3 pushes. I thought this one is a bit high, but it's 1, they pull back, 2, they pull back, and 3. Okay, they were trying to trick people. Okay, and then they gave pin engulf just after closing this, guys. If you wait every day, you will get the best trades. If you didn't enter here, if you entered here, then they gave another area for you to actually size in. Okay, another area to size in, another, they gave you an entry and another area to size in. Look at how perfect this was. 1 candle, 2 candle, 3 candle engulf. Okay, this is what we spoke about. I showed you in the first example that I took, I showed you in the second example that I took. The criteria are the same every day. Nothing ever changes, and just make your rules straight, because no market is perfect. Make your rules straight, and always remember, you will get the opportunity. Okay, in 1 or 2 currencies every day, you will get the opportunity you need. You must make it as strict as you can, so that you filter bad trades out. You don't want to be taking something that is bad or something that is not ready. You want to be taking something that is guaranteed. Nothing is guaranteed, but you know that most of the time your win rate is going to be high. And for people who are trying to take everything, your win rate is going to be low. Why? Because you're going to end up losing many things. But for somebody who has strict rules, your win rate is going to be high. Why? Because you're going to miss most of the trades that are not good, and you're going to get most of the ones that are good. Okay, and your win rate is going to be high. You see, this is a very good trade. Oh, he's just saying this because it worked like this. Guys, go back to all my videos. My criteria are the same. Go back to Friday. My criteria are the same. My criteria never changes. The process never changes. Okay, I look for the same thing day in, day out. Okay, so that's how you will be consistent. Okay, don't take everything, don't guess. Okay, have your checklist every day. Wait for everything to be confirmed. Okay, and sorry for making this video long. I wish you all the best. As you can see, very quick, 25 pips, 25 pips, 25 pips. This is 75 pips. Quick. Okay, they will obviously trap you. That's what they're gonna do. Hence, we look at the behavior. Okay, and one last important thing, once you see these big candles that are going nowhere, big candles down, big candles up, big candles, just wait. Okay, once they break structure, obviously their job is done. This shows that momentum towards the upside is it's strong. This gives you a green light. It's your robot. It gives you a green light that now you are ready to go. The only thing you are waiting for is every car in front of you to pass the robot and give you your opportunity to go past the robot. Okay, and that's the only thing you are waiting for. Now you're waiting for your engulf. If you get a pin, bonus. This is the engulf you are waiting for. You can go freely. Okay, just wait and be patient. So guys, I wish you all the best. Okay, I wish you all the best, and yeah, I wish you all the best. Okay, so thank you.